Good Sunday morning, good peoples. It is Bruce with Targeted Wealth Creation. Let me jump in here and give you guys the goods. All right, let's cover this and see what we got. Fun by fun. All right, let's start with a big one. What do you think Coney is gonna pay? Well, you've probably seen some of my videos. Let me take you in and just repeat what they've earned. How much money is in to an nth degree. Now, that doesn't mean they're gonna pay that, guys. And just as a reminder, all Group Cs will declare this coming Wednesday. What is that? The 23rd. And they will pay people who own the funds through Wednesday, excluding Thursday, which is ex-dividend the 24th. You will be paid on Friday the 25th. All right. So having said that, there's an accounting period for 4 weeks that I've talked a lot about because of the Pulte sort of disaster and really last payment disaster on Coney, because Coney closed theirs on a Friday within the accounting period. And from what I saw, I had enough cash to pay us a lot more, and they didn't do it. On Pulte, we didn't roll till Monday back in June, and therefore when we got 356, they said, hey, it should be $6 or $7. Everybody said, well, just wait till next payday. So again, they had enough cash in the door to pay us mid to high sixes, even seven, and we went down to 256. So just having recapped all that, let's look at Coney in many different ways. So you see the weekly calls. These all got resolved on Friday. All right. So net, looking at everything. I've revised this because of the yield only to a little bit less than $1, and I'll explain that. But I want to show you what the amount of money that they do have in this fund. So during this 28 calendar days, and most of it was recent. This 300 was closed a while ago, but the 330 and 360 have all been closed in the last 10 days. So basically, they earned 178 million, 152 million, and 101 million. The fund has been running like crazy. So that's $432, 432 million, and that equates to, with their share count, of $2.97. So remember, on the weeklies, when they get capped, we don't use that word that often, but it's still valid. They buy a spread, but they don't fully do spreads 100%. And even when they have a spread, they may choose a $10, $15, $20 spread difference, so that the bought call never does the insurance premium, and it just costs you money. And then the example would be you sold a 370 and you bought a 390. Well, the stock went to 386. So you blew by that 370 you sold. Maybe you sold it for $6, and now you went by it by 18 or 19. So you lost $11 per share on that scenario. But your synthetic made all that money. But that limits how much. So that causes these funds to only get to, say, 30, 35% capture of the upside. Because if you go back and look, and I'll do that in some other stuff, I'll show you in my payment schedule. But I just thought Coney was worth, because to me it's the big one. AMDY is pretty important, and then Hui. Those are your three, and Carvani. Those are going to be your three bigger payers here. Okay, just flat out tell you. So with this 152 million that they lost in the weeklies over all the cumulative 28-day cycle, that takes us down to $1.85. So that was $1.12. So there's $1.85 in the door. Right? And then when you add up, if you actually add up the active, this is even something I'm doing to do all what ifs, right? So if you look at what is open, it's 83 million, but it's really only about 52 million, because when they buy these things, sometimes they will, buy the call for $10 and sell the put for 9, and it's only $1 on, 20,000 contracts. But sometimes they're buying a 390 and the stock's at 412, so they got to go pay 30 for the call and sell the put for like 20. So there's a $10 spread. So it cost them a lot. And then we track it and say it's at 460, and we say we have all this profit, but we forgot that 10 or 12 when they went into it, which may be in a different accounting cycle. So they went into this one in our accounting cycle, right? So that's why it drags down some of these values. And that's a little complicated, but I wanted you to understand it at least. So I'm still showing 57. It's active though. It's not closed. It's not booked. It could all disappear, right? And this was action on sort of on Friday. All right. So what do I think they're going to pay, Bruce? Get to the question. Well, I'm going to answer that, but I want to show you down here. So when the stock was 961 in June, they paid 53 cents. When it was 823, they paid 65 cents. When it was 777, they paid 43.59. Look at last time they paid $1 was February 2025. 104, and the stock was at 1337. Well, guess where we are now? We're at 1032. We've really come up, right? This was a low in the markets. We've done a V bottom up, and Coney has really performed. Unfortunately, Coney can't keep up with coin. It's capped like crazy. And that is the crux. So I'm going to jump back to the sheet that matters and talk to that now. So here is my estimate. $88.50. I want to give $1. I really do. I can give it, but when you look at what it does over here, it's a yield of 120. You see those sometimes? So I'm hoping that we get it, and I really think we should. I'm just not going to forecast it. I'm the one who forecasted Pulte for $6.24, and it paid $2.56. You talk about horrible. But I voted with my feet. I'm out of Pulte. I won't even own Pulte anymore. So just when you do that to me and you have the cash, I'm out. Okay, enough of the soapbox, Bruce. All right, fiat. Not too exciting. Let's look at fiat. 12 cents. I mean, oh, and by the way, guys, look at this over here. Just leave. I'm going to skip fiat for a second and go back to Coney because I forgot to tell you something. Price change up 14.92. See, it annoys me when somebody tells you what delta between them was. Well, that's not relevant. 1.4 delta on a $10 stock is a lot more than a 1.4 delta on a $60 stock, right? So don't you want to know percentage change and not dollar change? So I myself said, well, I'm not comparing apples to apples. I want to compare apples to apples. But look at fiat. So anyway, what I wanted to tell you, because I did this, I wanted you to see this. So here's the current coin price. 419.78 close on Friday. What was it during the 28-day accounting cycle on June 23rd? It closed at 308. So it was up 36.12%. So what did I just tell you that Coney went up in the same 28-day accounting cycle? Did it go up 36%? Did it go up 30%? Did it go up 25%? Did it go up 20%? Did it go up 15%? No. It went up 1492. So if you do the math on that, I can tell you right now that that's about 40%, give or take a percent. So these funds just cannot keep up. Now, the leverage ones can. So I'm going to Roundhill and I'm going with the leverage. Now, on the way down, they can go down a little bit more, but they pay decent. They may not pay as much as Coney. If I was YMAX, I'd pay $1 here in Coney. I wouldn't want to lose cone heads and other kind of people. So they frustrate me, guys. When you make the money, pay the money. And guys are going to, well, they got to pay out. All of that supposition about, yeah, there's a tax rule that says they have to pay out 90%, or they get taxed on it, so they don't have to pay it out. They would, rather than getting taxed. But that isn't today. Anything can happen in the markets and that money disappears. All right, Microsoft, enough of my soapbox. MSFO, what are they going to pay? So we've got a 53% yield on fiat with 12 cents. Look at fiat. It's almost down 30%. It's the inverse of Coney. Well, duh. But why wouldn't it just go down the same? Why wouldn't it go down 14.92 instead of 29? Well, look at this, $2.91. So they can't pay a whole lot of money. That's a high enough yield. It might be 10 cents, guys. Okay, so let's go to Microsoft. Microsoft had a good month. Microsoft earned money. They earned over $1.60. All right, so let's take a look. I've got them paying 66 cents. Still only a 46.96, but that's double. I think they're around 23 to 24% on their current IV. I've even got one showing 13.90, but that's 4 days ago, 5 days ago when I put that in. So it can jump to 17 or 18, but I suspect they're not much, they're 20 or below. So that's a huge payment, but they really earned it. All right, this next one, I got to show you this, guys. I may shock a lot of you. And again, it pisses me off if they aren't going to pay this. If all you have to do, and this is what I really should do, is see what their average, you know what, I'm going to do that while we talk about it. I'm going to take AMD. I thought I did that. Oh yeah, I did. Okay, perfect. I did it. So, my mind, I knew my mind likes to think like that. All right. So I went in to AMDY, right? AMD is the underlying. And I said, all right, what's active? What's on the books that they haven't closed at the end of the 28-day accounting period? Well, they got 919 calls and puts at 155. They're trading substantially above that. So the call value is worth 16 and they can buy the put back for 9. So they've got 7.8 million. But in some fairness, it cost them about 1.2 million negative when they put this position on during the accounting period. Well, we already have that down here, so it's already accounted for. So when these do get sold, they don't have to worry about that 1.2 cost factor. They had to spend that. That was already accounted for in the other cycle because that transaction was closed. The complete transaction wasn't, but one of the legs has already been bought and sold, the two pieces. So that money is out the door. So they'll realize, so right now they would realize this 37 cents. All right, what did we close? Well, they just closed these, guys. Look at this. They sold the 110 call for 45.03 and they bought the 110 put. They went right up to 1 day on 7/17, 1 day prior to the expiration. That's how you can buy it for 1 cent. So that gave them $2.59, peoples, per share. This is an $8 stock. Okay. What did the weeklies over the 28-day period of time cost them? How much negative were they? Well, I got 9.8 million, which is 47 cents. So I've got them earning $2.12. Now remember, earning and paying are two different things. In my opinion, it shouldn't be. Okay. But I don't own the fund and I don't make the decision. But I am an investor. So I vote with my feet. So I'm in Coney. It's my biggest position in YMAX. I'm out of Pulte. If they pay 80 cents or above, I'll hang in there with a certain percentage of my Coney shares. If it's below 80 cents, I'm gone with Coney. So that's just how strongly I feel about it. Okay, let's look at the accounting cycle so that I can show you. Now, granted, this is an up cycle. This April to June, if you go look at the chart, AMD started the cycle at 128, they're at 156. So AMD went up 22.42. Coin went up 36%. Okay. So what did AMD do? It went up 9%. Actually up 40.1. Pretty close, right? Because I didn't do that calculation, but that's what I got for coin also. So once these underlying funds move hard, everybody that really understands these funds knows that the underlying does better. That's not what I'm here to preach you. I'm just here to preach you. You have to pick your income funds that in up cycles not only are going to pay you, but have fantastic NAV increases as well. They're never probably going to pay the same yield percentage as YMAX, but their NAVs are going to explode higher. So with $2.12, guys, on an $8 stock, again, I want them to pay us, right? Let's see. What do I think they're going to pay us? It's not what I hope. Okay. Now, what you have to look at, this closed at 872. This closed at 1032. They both have a lot of money in the bank, with AMD having more money. Now, AMD hasn't had a lot of money for a long time. That's 718 for 2.5 months. It's just been full of money, growing as AMD went up. So they paid us 46 cents, 42 cents, 33 cents, 27 cents, 25. They're pathetic when it comes down to it. I mean, it's all relative. What's pathetic is if you own this thing at 20, or you bought it 5-6 months ago at a higher price, then you feel like a loser, right? When does it go back? Here's April. The stock was $16. In May, it was $17.48 at one point. Oops, I'm on the wrong one, guys. $7. Yeah, it's been a while since. I don't know. I don't think I go that far back on these. February was a high. No, it's only $8. Okay. So AMD has been beaten down for a while, but it's coming back, right? So it's 798, 702, 757, $8. Now 872. So what was the increase in the price? 9%. It's not about what went up 72 cents, it's about the percentage. So Coney went up 14.92, this went up 9, but they both captured 40% only of the upside, because that's what income funds do. So when they don't pay you a lot, that's not good. So if they don't pay 80 cents, that's a crying shame. I've actually got them at a higher. Now, I'll go either way. If they pay 88 and Coney pays 80, I'll say, okay, then you have a much higher yield over here. But see, I don't think they'll do that. I think they don't want to skyrocket the yield. But again, I hope I'm wrong. All right, let's go a lot faster here. NFLY did not have that great a quarter, but they still had like $1.50 on the books. When I looked at their current, I always look at these, their current puts and calls that are active, that aren't closed, don't have any money in them. But during the quarter, they made money. So they have enough to come out and pay the 73 cents. And they have a lot more than what they had when they paid 43. So that's my guess. Remember, they've been $1 Coney was $1.04. These guys were $1.07 back in February when the market was at a high. All right, ABNY. Oh, the other thing to look at is they didn't do this well over here, right? They're down 4.95% when the stock went from 1857 to 1765. But they earn good money. So this one, they may pay 50 or 60 only. All right, ABNY. ABNY didn't have much in a book value, but they earned pretty decent money. Or sorry, what they booked earned good money. What their active is not that strong. I don't want to pull every sheet and show you that stuff, guys. I want to get through these here. 41 cents on a 43 yield. I'll give you the yield at the very end. All right, PP. Let's see what we got. I got 47 cents. They did pretty good. I mean, they had a real drop down here, 55, 55, 60, and I've got them 47. So that's kind of in the middle. Still a 48% yield, right? Look at how low this IV is on PP. ABNB's got a very low yield also. All right, this is fun. I want to talk about Carvani. So Carvani, I'm not a fan of them. People ask me, Hui and Carvani, and I say, I don't know if their IP is strong enough to keep them going for multiple years. Somebody can knock them off. A bigger player can buy them out, because everybody acts like, oh, nobody's doing what they're doing. Yeah, they got a great model, but it's at the end of the day, it's retail used cars. So how strong a market is that? It was CarMax. If CarMax was so ahead in its day, why aren't they the leader? Because people continue to innovate in spaces through the internet, through AI, through other methodologies. Yeah, Carvani is doing well, but I just don't invest in it like I would Palantir or some other, even NVIDIA that just has an advantage. Okay. But it doesn't mean they don't pay a lot. These guys earned a lot. Let me show you what I've got them at. They earn like $10, guys. Well, I take it back. $10 is not booked. $10 is what the paper value per share of their between their put and call. So they're active. Massive cash in their active. Well, they could turn around and pay $1.70 and it wouldn't surprise me. But I went with a bigger number just because they are a $43 stock. They're not an $8 stock. It's only a 94% yield. Again, the range here, my guess would be 220 to 320. I went in the upper range, so we shall see. Ulti! Ulti has a fan base. All right, I got 9.7. Actually didn't update this. They paid 10 cents last week, right? Because it's in my other sheet. So that was awesome. 78.69. It's yielding almost 80%. All right, I'm going to move through these a little faster. I'm going to give you them all, guys, except for Hui. Hui is exciting. All right, I got 1790 for Max, YMAX. I got 15 for YMAG. These are hard. Okay. R. Diddy, up and down and all around. I got him at 29.50. Love LFGY. It is dropping slightly. Got a 53, a 46, a 41 that goes 47, 49, 48. I got him at 46. They got a high IV. Now remember, they don't have the IV since they're a portfolio. It's the holdings that they have. So it takes a little more work to come up with that. Same thing with Gaputi. It's a portfolio. So I got Gaputi at 30.5 cents. 33% yield. S Diddy, oh, look at it, 11 cents. I got them doubling that. They were 31, 27, 17, 20, 25, and it dropped to 11. I got them coming back to 22. Q Diddy, they were 11. I got them back at 18. All right, Chippy. Chippy's a hard one. Semiconductors have been doing really well. AMD's part of that. NVIDIA's part of that. But I think they're toppy. They're kind of topping. So I got this at only 30 cents. I could be off on this one, but I really blew up some others. So let's see. Look at my number. Last month it was 13. Not my number. The actual was 13. 10, 8, 9, 7. I got this group paying out $16. So let's take a look at Hui. And I'll explain. I got them paying $6.85. Well, why? Look at the value of their active synthetic. They're like a massive amount. I forget, like $80 or $90 above the strike price on the call and put. So the put's worth like $1 with time to go. And the other one. So when you add all of that math together, they're like $18, $19 worth of profit. Now, again, guys, it's not booked. But when you're that far ahead, in a week or two, it's almost impossible. Why they didn't roll it, don't ask me, guys. Maybe so they could stiff you and pay you $2 here. If they did that, make a note of that, guys. Don't forget, there's competition out there. Vote with your feet. If YMAX treats you well, stay there, enjoy it. If YMAX doesn't, there's competition out there, and that's the game we're in. I'm not a fanboy. I'm not here to sing the praises. YMAX doesn't want to interview me. They want somebody that's going to suck up to them and say all the good stuff, and I'm not going to do that, guys. I'm going to tell you what I see, and I'm going to invest with my feet, and I'm going to vote with my feet. And of course, my brain is going to direct my feet. All right, guys. So why 685? Because all that cash in the door. So here's a summary. I'm going to go through it for you. Simple. The big winners, in my opinion, 111% from Coney, 119% from AMDY, and 115% from Hui. Both these guys have the cash in the bank, in the door. Do you hear me, YMAX? Okay. So we got Coney at 88 cents. We got Fiat at 12 cents. I got MSFO at 66 cents. I've got AMDY at 80 cents on a 872 stock. I got NFLY 73 cents. I got ABNY 41 cents. I got PYPY 47 cents. I got Carvani $3.20. I got an Ulti 0.0970, almost 10 cents. YMAX 1790, 0.1790. YMAG 0.1500, 15 cents. I got R Diddy 29.5 cents. I got Gaputi 30.5 cents. Did I give you LFGY? I got LFGY at 46.5 cents. I got S Diddy at 22 cents. I got Q Diddy at 18 cents. Chippy at 30.5 cents. And Hooey coming in at $6.85 big cents. All right, guys, this is Bruce with Targeted Wealth Creation. This is not financial advice, and I'm not a financial advisor. That's what I got for you. Have a great rest of your Sunday. Bye for now.